there's a lot going on here, but I'm going to focus in on a couple of things. One of the things was if I had cash, if I had 100,000 and I could earn any rate of return. And Joey and I were talking to a group inside of our short-term rental mastermind, and we were saying, well, what we've seen is that if we could earn $500 per bedroom, right? And I know JD, you're earning 1,200, so shut up already. But if you earn, $500, that's $6,000 for the year, and if it costs you 12 grand to get into the deal, that's a 50% on your money that first year, right? Now, once you keep going, because you don't have to keep putting 12 grand in, the numbers start to get a little dumber. So one of the things I would like to kind of focus on is that, well, a lot of times we say, well, what if we did this with cash, right? We earn $50,000. Well, we have to pay tax on that at our tax rates. We only net 30. Well, what if we compare that to 100,000 in insurance policy? We could earn the same 50%, but we get to write off some of that interest because we have, or some of the taxes because we have loan interest. So our 50,000 minus taxes, we get this. Plus we got the growth on the policy, which is 100 grand earning at 4%. So we end up with 31,000 instead of 30 on the same deal. And I thought to myself, as we were kind of prepping for this podcast, is that's not a perfect example. And here's the reason why it's not perfect. It's because we have more access to cash. JD, you said that the average person only has a handful of thousands of dollars in cash, right? But as we continue to follow infinite banking, what we end up is we are in a greater cash position. I would argue that we would be in a 3 to 5 times greater cash position. So when I'm looking at this, I wouldn't compare 100 to 100. I'd compare 300 to 100 because I have more access to cash. Even though our units will do exactly the same thing, we will produce the same exact return. Nope, that's where I want it. I want it. I want it here.
Well, that's the investment.
No, exactly. I'm going to put 300,000.
You're saying you're going to put 300,000 into the same investment instead of 100.
Exactly.
Okay.
Because I can.
I'm following.
Because I can, because I have more money. Now, what you were trying to say is that nobody puts every dollar of their cash in the deal. So let's assume the guy who has 100,000 also has 100,000 sitting in his checking account, right? That he's like,
you're
well,
not gonna give your very last
I'm
dollar.
not going to give those dollars away. So what you're saying is that I have another 100,000 sitting over here in my insurance policy, right? That's earning 4%. But my whole point to this is that we get to take advantage of more deals because we're in a cash position. Now, the person on option A, this person has, if they're the same type of investor, they probably have the other 200,000 somewhere. It's just in a 401k. It's locked up in the home equity. It's in an IRA. It's just somewhere they can't touch it.
By the way, does it matter that they're in a 401k and then let's say they had a great year and then they're at 12% income on that or 12%?
No, if I added the numbers it would still not equal, right? It's not there. So I feel like when we look at this, when people want to compare what we're doing to what they're doing, I'm always going to take a 3 to 5% times example because I'm in that much greater position from cash. Now, if you're just now starting out, you're not, right? Because you're just now coming out of that. But wait a couple of years. It wasn't so many years ago. Ernie was helping me do this stuff. And I love like sharing the good stuff, but I love sharing the bad stuff too. It was probably 3 or 4 years ago. I can remember asking Ernie to, I needed $40,000 for something, $35,000. Hey, Ernie, can you do that? And yeah, it may take you 11 policies to get that cash out of it. Right? Because all the different policies I had, some of them were new and they were getting started. The other ones had big loans against them for things that I'd done before. Right? I've been there. I know. But I also know is that if we focused on stacking cash on top of each other, that all of a sudden we're going to turn around and go, crap, we got some money here. And opportunities can find that cash and we can do a lot of work with it.